Hey guys, I'm Karla Dennis. I am the CEO and tax expert of an award-winning tax firm, KDA. And so many of you business owners, everyday taxpayers send me direct messages, comments on various videos. So I want to take the opportunity to answer some of those questions in this video. But before we jump in, I need you guys to like, comment, and subscribe so you don't miss out on any wealth building, business building, tax information. Now, let's get after it. Very first question that came through is, hey Karla, I'm an individual and I'm a W-2 wage earner. I also have rental income. If I take the standard deduction on my W-2, am I able to write off my rental losses or my rental deductions? That is such a good question. The thing that I want you guys to realize is that taking a standard deduction is different from writing off your deductions associated with your rental property or any other type of business. It's completely different. Do not commingle standard deduction with business write-offs. Those are two different things. Standard deduction equates to itemized deductions. So whether you take the standard deduction or not, you're still going to be able to take your write-offs as it pertains to your rental property. Good question. A second question came in. Hey Karla, I have a son in college who asked for support with his studies. He doesn't live with us and he's 22 years of age. I'm a business owner and my husband is a W-2 wage earner. Are we able to deduct his school expenses? You can deduct his school expenses a couple of different ways. Number one, if you are a business owner, you can put your kid on payroll and pay him a wage for a job that he does. So I want to be clear, he needs to be able to work for the business, something he can do remotely, and you can pay him, he can pay his own college. There are also other things that you can do, like you can take some of the educational credits and be able to get a deduction for your child that way. So yes, there are things that you can do. You want to try to research it out and figure out the best strategy based on your income level, based on the age of your kid. Another question that came in is, hey Karla, how do you track and document all of your business income and expenses? Is there an app you could use? Oh my gosh, there's so many apps out there. So you can put an app on your phone. You can use mint.com. You can use Hurdler. That's an app. You can use the QuickBooks app. But at the end of the day, what's going to be really important for you is to make sure you track all your income from every source derived. That is the mission, right? That's very key. Also, all of your expenses from any source paid, whether you're paying by Zelle, whether you're cash apping people, just make sure you're tracking all of it by category, meaning is it office supplies? Is it marketing? That's the most important thing. If an app can help you, go for it. But at the end of the day, make sure you know total income, total expenses by category. Another question came through. Karla, if I made capital gains profit on my taxes and turned around and purchased rental properties under my LLC, can I avoid taxes since I have a business? So you're probably asking, can you avoid taxes on the capital gains of the stock since you have a business? I want to make sure that we're clear. All income has to be reported. So the capital gain from the sale of the stock is going to be reported on your tax return. The net profit from your business or the net loss from your business is going to be reported on your tax return. Whether you avoid tax or not is going to be based on the total overall income or loss on your tax return. Just remember that. I think sometimes you guys think you can melt two things together, but at the end of the day, you got to report all income and report all deductions. And at the end of the day, it's going to be about the net profit or loss on your tax return and your overall net tax liability. Another question came through. Karla, is there any difference in selling a stock at a loss for short-term or long-term holdings? If your stock is being sold at a loss, there's not going to be any difference except for you're going to have your short-term stock losses and your long-term stock losses. You can only take losses up to the amount of your gain when it comes to stock and $3,000 above. Just remember that. So you're never going to be able to deduct more than $3,000 in stock losses unless you have gains to offset it. If your losses get suspended, then they're going to suspend according to short-term losses, according to long-term losses. You will have two buckets sitting there for whenever you're going to have a capital gain on your tax return. I love this stuff. That is why I want you guys to continue messaging me with your questions, put your comments on my videos, and I will come back and answer your question. You know why? Because when you know better, you will absolutely go out there and do better. It is my goal for you to make more money, build wealth, pay less taxes, and keep your cash in your pocket. But don't forget, it's also my goal for you to like, comment, and subscribe so I can keep you updated on all things tax, business, and wealth building.